Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at a company that I'm interested in it. So hopefully by the end of this video, you're interested on it as well. It is a company that is 46% undervalued, 66 years of dividend growth. Hedge funds have increased their positions last quarter, and this company has performed better than the S&P 500 for the past 5 years. So hope you like this video. If you do, give it a thumbs up, share it to those people, to someone that you that think they will like this company. As always, please remember, this is not financial advice. This is just me sharing. Again, if you're new to the channel, hopefully by the end of this video you like and subscribe, hit that notification. It really means a lot to me if you join my community. With that said, let's take a look at this company. So the company I'm talking about is Parker-Hannifin. The ticker symbol is PH. This is a company that engages in the manufacturing of motion and control technology and systems. It operates through aerospace system segments. So if you go to their website, you can see some of the products. So you can see they're pretty much in the aerospace systems and technology, but they also do like cylinders, gas generators, hose, piping and tubing. You can see motor, pumps, refrigeration and air conditioning, pretty much a lot of the products. So they also, if you look at this one, they also had acquisition of a company, this company called Megit. Hopefully I'm pronouncing it right. But if you look at their presentation, you can see what this acquisition is. So by looking at this chart, you can see the braking system. They didn't have it, but the other company had it, and it combined. So you can see it, electrical power, so just acquiring this company, I think, in my opinion, is beneficial for Parker. Now if we go to Simply Safe Dividend, based on their dividend safety score, they rated as 94, which is very safe. Dividend yield is 1.86. Market cap is about a large cap, and here's your beta, which is average. At the time of this video is at 286. Now if we go to some of the key metrics, you can see payout ratio is 24, which is low for most companies. During the recession, they've increased their dividend. I always like to look at this one because, in my opinion, we are in a recession or are going to, but it doesn't. But I always like to look at this one, so it keeps me looking at companies that are solid in terms of recession. Dividend streak of 66 years without a reduction. If you look at the dividend growth, the last 20 years, 12%, which is very fast. Last 5 years, 11%, which is fast. Check this out. The latest is 29%, which is very fast. Now, if you look at the chart, you can see, I always like to look at the upward trend. And this one you can see is a very solid upward trend. 66 years without a reduction, 66 years consecutive increases. So solid company, in my opinion. Payment details, you can get paid quarterly in the months of March, June, September, and December. Annual payouts about $5.32 per share, which breaks down to about $1.33, as you can see from here. Now looking at the dividend yield, you can see it's like close to the 5-year average. 52-week price range is kind of like in the middle, with the high of 334 and then the low of 236. If you're planning on getting this, hopefully in the next couple of weeks, it will drop and then you can get it a little bit cheaper. Looking at some of the metrics, you can see the free cash flow, earnings per share, sales growth, total sales, return on investment capital, 14% the last 12 months, return on equity, 15% the last 12 months. Now if we go to Yahoo Finance, you can see performance outlook is bullish, and then you can see right here during the earnings, 4 beats. They have one coming And then you can see the revenue. You can see comparing it to 2021 to 2022, it has increased from 2021 of 14 billion to 2022 of 15 billion. Now if you look over here, you can see the trends, mixture of holds to buy to strong buy, and then you can see right here it's currently under the average of 317. Now if we go to Yahoo Finance, who are the top institutional holders, you can see from here Vanguard, BlackRock, State Street, JP Morgan, Bank of America, pretty solid companies holding pretty good amount of shares. Now if we go to TipRanks, based on their analysis, they're rated as modern buy. There's about 7 buys and 3 holds. Price target is about 320 with 12% upside, and then you get your high of 385, 320, and then 286. Now if we go to more analysis, you can see 7 is the smart score, and you can see right here hedge funds have increased their holdings, so hedge funds confidence signal is positive. They've increased their holdings in the last quarter. Now if we go to CNN Business, based on their stock price forecast, you got a high of 462, a medium of 317, and a low of 260 with analysis recommendations of buy, 12 buys, 4 outperform, 4 holds, and only 1 sell. Now if we go to Simply Wall Street, based on share price and fair value, their fair value rated as 529, and then currently is at 286 with a 46% undervalued. So now if you go a little bit to the company overview, you can see the positives and negatives. Has a high level of debt, profit margins are lower than last, and then significant insider selling in the last 3 months. Now we swing to Stock Rover, based on their analysis, they rated as a buy. You got 7 buys, 4 holds, and strong sell. Now if we go and compare it to the S&P 500 risk and return, you can see right here S&P 500, the 5-year return is about 57, and then you can see PH is about 64. 3-year return is still even better. The 1-year return was not, but you can see 3-year return, 5-year return has been better than the S&P 500. Now if we go to Webull, based on their analysis, 22 of them they're rated as a buy, and then you got your buys of 50%, strong buy at 22, underperformer 4, and a hold of 22. Price target 385 is the high, 317 is the average, and 260 is the low. Moving along to Stockhart, you can see based on their analysis, you can see green, and then you got your red, and then you got your orange. Strong potential growth, overvalued stock based on, and then strong dividend pay, acceptable financial status. Now if we click on that one, you can see based on 6, the revenue, they said that 2 of them is bad, 3 of them is neutral, and 1 of them is good. Profitability wise, based on 22 of them, they said 9 is bad, 6 is neutral, 7 is good. And then you're looking at the free cash flow. You can see 5, 3, 1, and 1, cash and debt, 12, bad, 9, and 1. All right. Now moving along to Robinhood, you can see based on their analysis, 76% are rated as a buy, 19 is a hold, and then 4% is a sell. At the time of this video, it's at 286. Now for the performance, you can see for the week, it's only like 1%. For the month, it's up almost 10%. 3 months is down -3. And then for a year, it's down 10%. And then for 5 years, it's up 56%. So my take on this one, I think it's a solid company. Not sure I want to buy it right now. I think I'm going to wait and see if there's if it goes down more, considering the market right now is very volatile, and in my opinion, we have more downside in the next couple of months, in my opinion. So I'm definitely going to see if I'm going to go do an entry on this one. maybe, you know, if I can get it cheaper than the current one at 286, then that will be good. Not too sure how much you know, shares I'm gonna put in, but I usually start with 10 and then work my way up. But that's it, man. Hope you like this video. Give it a thumbs up. There are other videos as well, so definitely check those out if you're interested. There's great companies as well that if you want to see if this is something that you want to invest in. As always, please remember it's not financial advice. Thank you so much for watching. Hope you liked this video. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.